It's perhaps been a bit of a disappointing year so far for Amazon investors. The stock is up, but given their cautious outlook on the latest earnings, are we going to see the shares come under pressure as the world continues to return to normal? I thought it'd be interesting to do an update on Amazon, given we had earnings in late July, and we had seen the stock break out to all-time highs in mid-July, but hit hard on earnings and really fallen back into this wide trading range they've been in pretty much over the last 12 months or so now. So I thought let's take a look at them in a bit more detail, talk about these recent earnings, why were investors disappointed, then we'll come back onto the charts and take a look at things in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on Amazon, taking a look at the stock for the rest of this year. It's perhaps been a bit of a disappointing year compared to other strong performers in the market, but I thought we'll examine it in a bit more detail, see perhaps why we've seen sentiment hit. It's been a rocky couple of months since earnings, so we'll talk about the latest earnings, the outlook, then jump onto the platform, take a look at the charts in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel and it means we can continue to push out the various stock videos that we look at during the week. Okay, let's get into it and take a look at Amazon in a bit more detail. So, of course, it is the online retailing giant, also has a very successful cloud computing and hosting service as well. It's the fourth largest company in the S&P 500 with a market cap at the time of recording just above $1.7 trillion. Of course, it was one of a group of stocks, the so-called stay-at-home stocks that did well from the various coronavirus lockdowns around the world. Online shopping, as we all know, boomed and Amazon, given its position, did really well out of that. But the latest earnings were a disappointment to investors. On the one hand, earnings per share beat expectations. The market was expecting earnings per share of around $12.30. They came in just above $15. So that was good. But Amazon's revenue missed expectations for the first time in 3 years. So I think that was something of a shock. And we saw the stock down immediately after those earnings. The stock was down by around 7%. It also had a bit of a cautious outlook for its next quarter's revenue. It recognized that as the world got back to normal and people were going out and going back to work, then they would be doing other things other than shopping online. So, a company clearly that's done really well out of lockdown over the last 18 months, it's not surprising when things get back to normal that perhaps their business may revert to a more normal rate of growth as well, or normal for Amazon. And perhaps this was, again, something of a disappointment for investors. It does, of course, still control a significant percentage of the cloud computing infrastructure. AWS, Amazon Web Services, saw its revenue grow by 37% in the quarter. So good numbers there, but I think investors still concerned about this outlook for revenue for the retail side of the business. So we saw them hit hard on earnings. We did see all-time highs earlier this year for Amazon. But again, perhaps a bit of a disappointing performance year to date, although the stock is still up by 6% in 2021. Let's take a look at the levels to watch, then we'll go onto the charts and look at the technicals. So that all-time high comes in at $3,773. We've seen the market, or the stock price of Amazon, sell off since then. The most immediate resistance level to watch from me, the highs earlier in September, around 3,550. We do have quite a bit of support on the downside. The most immediate low comes in around 3,400. After that, I'll be looking at the August low as a pretty major level. That's at 3,175. But as usual, to put a bit of color on these numbers, take a look at the charts and the technicals in a bit more detail. I thought we'd start things off with a moving average, 20-day moving average. And this does illustrate, I think, the problem of moving averages, particularly on Amazon from September last year through to about February of this year, when the market's going sideways, the price and the moving average are flip-flopping over. So we have no real trend and get lots of false signals. Some of the more recent signals, I suppose, have been okay. We saw it fall below the moving average, giving a sell signal after those earnings in late July. The latest signal we had was a buy signal towards the end of August as the price moved up through $3,300 above that moving average, and it's continued higher since then. Interestingly enough, the moving average has been providing sort of support in mid-September when the price sold off. So from a moving average point of view, it's positive. If we take a look at the RSI down here, the overbought, oversold indicator, it did go overbought on the way up. So it did, I suppose, an okay job as the stock moved above 3,500, suggesting that perhaps it had gone far enough since then. The stock sold off a bit. The RSI at the moment is not far off 50%, so I don't think we're getting too much from that. But let's take a look at the price action and the trends. Of course, if we took a really long-term look at Amazon, then clearly the longer-term trend is up. And it is punctuated with periods of sideways trading, like here from 2018 through to 2020. Big sideways range from the stock. So perhaps we're going through a similar thing again, or we have been going through a similar thing again at the moment. But it has been broadly sideways now for, 14 months or so. We get these odd breaks to fresh all-time highs, but we get very little follow-through. And again, a similar thing happened there, breaking up ahead of earnings in July. But ultimately, when those earnings came out, the market was disappointed and the stock fell. And perhaps the end of the year will be more of the same, more sideways trading for Amazon stock. There's a definite range here. I think for medium-term traders or shorter-term investors, we've seen a floor for Amazon around $2,900 for the stock. And whenever the stock has pushed much above 3,600, we've seen the sellers come out. So I think what we need for the next major trend in Amazon, I think, is a definite break back above those old highs. Let's call it 3,800. If we saw it break through there, perhaps we see the start of a new trend. But it does feel like it's in something of a holding pattern at the moment. So I think it's a difficult one to get excited from a medium to longer term trend perspective. We do have this sideways range in place. So perhaps we'll see the stock continue to oscillate between $3,000 and $3,700 as the year goes on. That's it for the update on Amazon. We'll see what happens. Are we just going to see sideways trading towards the end of the year? I think perhaps that is the risk, given that they've said themselves that businesses can return more to normal now. Perhaps more range sideways trading is what we see for Amazon. We'll come back to it and do some updates as the year goes on. But for now, from me, David Jones, and Capital.com, we'll leave things there. Good luck with your investing.
For more trading videos just like this, please subscribe to our channel.